Hey, Dan Fitzpatrick here at stockmarketmentor.com. And I want to just talk real briefly about drawing these boxes that I talk about a lot. First of all, they're not Darvas boxes. That's different. They're not used for predicting. What they're used for, what I use them for, it's just a simple method that I started, frankly, when I've been spending so many years, it seems like, where one of my job descriptions is teach proper entries to Stock Market Mentor members. And because we always have people coming in, most stay, some go, then some come back, etc., etc. It's like a never-ending process. And so what I started doing was saying this, like, if at any given time, you can buy a stock anywhere here, but the only time you can do it right now is on the hard right edge, as Alan Farley calls it. You can only buy the stock here. And so, it's a common attempt, I should say, it's a common attempt that newer traders make to try to predict where the stock is going to go. And when they do that, they wind up getting all wrapped around the axle because they start expecting the unexpected. I see the stock's right up at resistance here. That's failed 5 times at that level. This is the time it's going to break out. Okay, dude, how do you know that? You don't. You're guessing. But you're saying that you know it because at the end of the sentence, you're not putting you're not putting a question mark, you're putting an exclamation point on it. So this is what I do. I say, okay, you're looking at buying, say, Waste Management right now. So let's start right where the price is now, and that's the upper left-hand corner. And then what I'm trying to do is this, I'll put it right here. And now, we've all looked at thousands, some of us millions of charts, and we see all of these different price patterns and things that happen. And so you have to be thinking about it in this way. When you are buying a stock, what you are saying is, if you're just drawing the box here, this stock will not fall into the box at all. I mean, if it was going to fall into the box, you wouldn't be buying it there. So instead you're saying, okay, upper left-hand corner, this is where I'm buying, and I expect the stock to not come back into this box. In other words, this is a really good entry right here. And so if that's what you believe, then you go ahead and make that trade. But then there's another side. If you say, okay, well, maybe I'm a little too optimistic, maybe the stock could fall into the box. Okay, fine. How far down could it fall to where a box would capture the decline? I mean, could the stock fall all the way down here, and match this September low? Sure, it could, but what we've had going here is we've had this kind of a price move here, and we've got, well, we could look at a kind of a flat channel there. So we see these as our relevant trend lines, right? And this is all speculation, guys. That's what trading is. It's not guessing, and it sure isn't winning. It's speculation. So we could look at this. I would look at this and say, okay, I see what's happening here. So I would think that the stock could fall clear down here to the top of this line. Okay, so if that's your thesis, then what you're really looking at is buying the stock here, and you have to give it a 2.5% risk. Because you have to base your trade on something. And so your basis is, I do not believe that the stock is going to fall low enough to break this trend line. So therefore, my stop will be right here, at this trend line, wherever it is. So right now it's here. So this is where my stop is going to be. So I'm buying here at the top of the box, and I've got my stop right down at the bottom of the box, which is my judgment as far as how far the stock could fall based on my technical analysis. And that's about 2.5%. So that's your box. That's your trading box. You're saying if the stock falls into the box, as long as it just doesn't fall out the bottom, I'm okay. Now, why is this important? I'll tell you why it's important. This is a little bit subtle, but let's say you're buying the stock here. And we're not just going back on the chart for a results-oriented analysis, guys. This is real. So we just looked at where that box would be. Now we're here, and we see this stock up here, and we decide, we're going to buy it right here, right now. So where would that box go? Like, how far down would we have to extend this box to encompass what we believe would be a reasonable price decline? Well, we see that in the past, over the last several weeks, the 20-day moving average held the stock. Same thing here. So wouldn't we then have to assume that the stock could fall, if it did peak here, that the stock could fall clear back to the 20-day moving average? To me, that would be a pretty safe assumption. And so if that's the case, then we have to put the bottom of the box here, the top of the box right up here. So we've got a different box. And that now, you have to pack on about a 4.5% loss that you could take before you would even know whether you were wrong or not, because this is the pattern, the 50-day moving average. So this is important, again, not because it's a predictor, and I'm not looking at this saying, oh yeah, I think the stock's going to fill that box. No, I'm saying right here, right now, if I decide to buy this stock, what's my risk? What's my risk? Because if you can't look at the downside and find some logical support level for the stock, then you're actually just guessing. That's really it. You're just guessing. So let's look at a couple others here, a couple other charts that can give you maybe a better idea. Just some stuff that I'm looking at now. Okay, I took a position in Lululemon a few days ago. I was actually going to add to it today, but I looked at the market, I looked at my position, and I thought, okay, well, and think about this in your own trading. I'm thinking, okay, I don't mind taking on more risk right now because this is a pretty small position, but do I want to take on a lot more risk? Answer, no, I don't. I could take on a little risk, and then I'd be in a position to make more money if the stock keeps going. But then I'm thinking, and this is just stuff that I was thinking in my brain, as I was looking at the stock. It took a heck of a lot shorter amount of time to go through my thought process than it is telling you about it. So I look at this whole thing, and I decided that it's less than $2 below $200, which I would have to assume is going to be some type of resistance. So do I want to take on more risk, more money in a stock that probably has about $2 of upside before we could at least expect it to be tested? And my answer was no. I just decided, hey, I got a good one. I'm in at the right time. This is not the right time to add, so I'm just going to stick with what I have. Now, where was my box when I got in? I think it was on this day, but it might have been, I had to stop, I had to go back and look. It was on this day, on the 7th. And what I was doing at that point was I'm looking at this saying, all right, 50-day moving average is support, but actually this stock fell even below that level. So any pullback, I have to put my stop below here. I'd have to put it below this level here, which is the low, we'll call it 185. I have to put it below 185 because if I put it above, let's say I put it slightly below the 50-day moving average. Well, stock was down there on the 3rd and it rebounded and went higher. So if I keep the stop really super tight, then I'm risking getting stopped out on normal volatility only to see the stock turn around and rocket higher because it is in kind of a little bit of a squeeze. So what I did was I looked at where the price was and I drew this box down here. Don't read into it that I'm drifting it to the left instead of the right. I'm just showing you that this is where the low was. So I drew it right down here, and then my stop would be a little bit below that level. We'll say right around 185. So now I'm buying it here at 192. Stop is at 185. I'm risking about 4%. And so as I look at this box, I'm saying, yeah, I could see the stock. I could see the stock going down in that level to that level. It didn't, and so that was actually a pretty good. It was a good trade. Now, let's just continue this analysis. So if I did choose to buy more today, this is what I would have had to do. I would have had to take this box and say, let me turn it around the right way. I would have had to say, okay, I'm buying right here at 198. Where's my box? Where, if the stock falls into the box, where would it be? How far down could it go? Well, it could go clear down to the 50-day moving average again. I'm not so worried about this level anymore, this 185 level, because we got a little pullback here. And so that's kind of a higher low. We're really doing microscopic surgery on this, guys. But I would have to look and say, look, the stock could fall back. It could come back tomorrow. Come down here, fritter around, could come down. You know, I could see the stock basically coming all the way down to the bottom here, and then ultimately, hopefully, doing this kind of move. It could do that. So if I can see the stock doing that, coming back again to test the 50-day moving average, then this has to be the length of my box. It has to be clear down here. And again, the whole reason I'm doing this is to go through this exercise of saying, okay, if the stock moves against me, how far is it likely to go, just as a normal function of the way it trades? And I have to extend it clear down here. And so then I pull this down. Now, to buy the stock today, like I was considering doing, you know, let's assume it was right at the close. Then I would be taking this kind of risk. I'm buying it here. I have to take almost 6% of risk. Well, I don't want to take that amount of risk right now, not in this market. But in order for, if I said, okay, well, I only want to take 3%. All right, well, you know, what's this going to do? I mean, I could get stopped out of this stock just at the open or something. So I'll just wrap it up with this. Again, this box is not a predictor. You're not going to draw it up here to see, oh, how high can it go? No, I'm talking about basing it on what's happened in the past, previous price action. Where could this stock go if it didn't do what you're hoping it will do, which is skirt around the upper left side and just keep on going? And where this is really most helpful is in a we'll just stick with Lulu, is in a situation like this. When you're looking at, let me get rid of this too. When you're looking at this stock and you see this kind of price action here, we'll get rid of that too. You see this kind of price action here, and you're saying, okay, it's not a Fitzpatrick, textbook base because it's a little steep and there's not really much downside. There's not really much support down here. But if I'm buying here at 190, my assumption is that the stock is not going to go down and test this prior low. So if that's my assumption, then I have to put the bottom of the box right down here. Like that's it. So now I've got a very, very tight box because I'm able to do that. Like why would I have the box any lower than that when my expectation based on what the stock has done in the past, my expectation is that it is not going to fall below this day's intraday low. So my support, the low part of the box has to be there. The upper part is right there. And so this is a really, really tiny box. There's a greater likelihood that the stock is actually going to just keep going around the box and keep going up. So this is just an exercise, guys, and it'll probably take you a while to kind of figure it out, but it's definitely worthwhile, because what it's going to do is keep you out of bad trades, because you're going to look and say, wow, that's a really tall box from where the stock could go to where it is right now. I think I better look for a better entry. And we've seen other stocks like Edwards, same, we can do this. I could do a 30-minute video on how to draw these boxes, but the bottom line is this: make sure that it is logical for you to be able to look at the upper left corner of the box and have it tagging where you are buying the stock, and make sure it's logical to say, you know what, I've seen a bunch of charts just like this, and a lot of them do just keep on going and they never fill the box. If you can say that, you're in a good trade. But if you can't, if you're saying, well, I see a lot of them, they would absolutely fall into the box, but I think this is going to be different, then you're not really trading, you're gambling, okay? So, okay, hope this helps. I'll see you next time.